Good evening, everyone. It's Calvin. Thanks for checking out the video. Today is Wednesday, 23rd of January, 2013. Let's get right into the charts. First of all, I'd like to apologize. I haven't done a video in a while. I'm actually in the process of changing brokers, so I haven't been trading for a while. So let's get right back into some of these charts. Let's look at the SPY. Okay, pretty much what I called out for, we'll be heading towards that 150, and that's what we're getting. We do have a little more upside in the market to 150, and I think this is where we're going to start to stall out just because of the 150 psychological number. That's going to be really very, very important resistance. Maybe we'll poke through it a little higher, maybe by the 151, maybe pierce a little bit by. This is where I seriously think the market will top out, or at least stall out in the short term. Okay, guys, let's look at Apple. Apple reported earnings after the bell today, and just completely ugly looking chart, ugly action. After hours, it just continued to fall. I believe to around the 460 area. And if you remember my video, I've called out. I believe that's pretty much the measured move. I called out in the weekly bear flag. If you measure out the move, this move bear flag, it plays out pretty much to 464. So it went a little bit lower than that by a few bucks, but nonetheless, that was your level and off this pattern, and it did seem like it played out the measured move. See how important these measured targets are, guys. That just gives you a nice reference point of where the stock might pause, take a break, and find resistance. But that's just one side of the story. You have to find multiple reasons why that would hold. What else is over here? You're near the 382 retrace. So right here, you would suspect that the stock will pause here, but the bigger pattern does say there's further downside, and that's what I called for, guys. So you shouldn't be surprised that Apple is falling because of what the chart is saying. So my ultimate target, I believe, in the short term, in the coming weeks, will be 420. That's where I will be long. That's a nice gap fill. That's off this bigger triangular pattern, guys. If you measure it, the breakdown pattern takes you to about 420, 419. I called this out in the last video, a few videos ago as well, and it lines up with a gap fill code. So that's where I will be looking to go long, but not. It's very important to realize after earnings you do not play it. Maybe as a day trade, but as a swing, you would not be looking to pick it up here because of the 3-day rule. So after earnings, you would wait at least 3 days after earnings. Make sure all the selling is done, all the margin call selling, all the forced selling is finished, and that's when you look to pick it up. Okay, guys. So in the next 3 days, if it does go in the 420, I will be a buyer of calls in this area. But it depends how it gets there. It's gotta be a straight shot. You don't want to see it consolidate here, and then it's just building a strength to cut through it. So it's got to fall straight into 420, and that's where I'm looking to buy Apple on the long side. Let's look at Amazon. I believe Amazon reports earnings next week, but the chart's looking fine. Still breaking above this previous resistance, consolidated, and still holding this previous trend line. So it's consolidating nicely here. So let's see if it has one more leg up to the upside on Amazon. Looking pretty great on Amazon, right? The chart. Let's look at Google. Google reported solid earnings, I believe, on Tuesday with a nice gap up. Recaptured this trend line. I did mention, remember, in the previous videos, that gap fill with the 50 moving average is important support, and that's exactly where we got the bounce off earnings. So I'm now the earnings that are they reported good earnings. I'm a little more skeptical to short this level, but you definitely could take it still with a very tight stop. But it's just a little more skeptical now because the earnings were good. So usually, it's you favor the upside on good earnings. So it still could be a short setup in my opinion because of the pattern. So it's still a decent shot. And any close above this bar, just get out. So your risk reward is very good on Google if you do want to play that short. Still, it's still a nice big sell-off candle on higher volume. So that's a very bearish pattern. So whenever you close back above this big red candle on a daily close, that will negate this big red bar. But the volume is very high, and there's 12 million shares on this day here, and another 11 million shares on the next day. So that's a big sell-off candle, very bearish right there. So that's what I'm seeing on Google. Let's take a look. What else? Let's take a look at the VXX. The VXX is right still hovering around that $12 level. So this is where We did break that. See, this is important support. When you get these wide bars cutting right through, that's a break right there. See this consolidation, and this means that this was a valid trend line. And then when you see a wide range bar going through it, this is where people are selling. They're getting out because they know that this is broken support. Okay, guys, now it's just hovering around this $12 level, guys. So the VIXs are pretty much at the levels they were in 2007. So that's a little bit scary. I'm not saying that the market's going to crash, but it's just to be aware that the VIX is trading it when 2007, before the financial crisis. Let's look at the UUP to dollar. The UUP dollar still has that head and shoulder pattern in play. But like I said, at the lows of the chart, they're more prone for failure. And usually the move is in the opposite direction, and it's usually a big one. But so this pattern is still in play, hasn't broken yet, so we still have to just watch the dollar. Very important chart to look at all times. Let's look at the SPY one last time before I go. I just want to go over some important levels to the downside. If we do start to fall, 150 is resistance, guys. The first resistance. So let's see if it gets there. I think it does. I think it will get to 150. But let's look at the downside support. This will be your first support, guys, because we did confirm above this trend line. So your first minor support will be at the 148. Let me look at this and make sure. Yeah, the previous. This is obviously going to be support now because we confirmed above the 52-week high. So that on the way back down, that's going to be support. So you could probably scalp that as a day trade, but that's definitely going to be support right here, guys. This previous 52-week high at around 148 roughly. Okay, and that's going to be support. Your next level would be this previous resistance level. It's going to be now support at 147. And then the more major level will be this red line here with the 20 moving average and with these pivots right here. Okay, and then obviously is your 50 right here. And this, so I think this, if this level breaks, then this pattern, inverse head and shoulder pattern, is going to be a failure, and you're going to look for a very fast move to the downside. So as long as it stays above this red neckline, guys, we do have, the markets are fine. The markets are in fine shape. So as long as it stays above this red neckline here, extend it out. As long as it stays above that, the market has room to go up. Okay, guys, let's look at, let's take a look at IWM. Sure, why not? Pretty much holding it up well. Same story here. IWM holding up well here. See if it has more legs. Not much to do here. Just floating up on lighter volume, I believe. Let's look at the volume here. Yeah, pretty light volume, just floating up. Let's look at the XLF. That's always a good indicator of how strong the market is. XLF holding up fine. We do have a doji candle here though, so that's very intriguing to keep an eye for. Usually doji candles could signal the end of a move, so we'll just have to see if we get see what happens tomorrow. Every day is just a piece of the puzzle. Okay, guys. So every daily print just gives you one more piece of that puzzle to see what will happen in the following trading day. Okay, I think that's everything that I wanted to take a look at, guys. Also, I wanted to give you guys a heads up that I'm open to taking any ticker symbols. So if you guys are interested in any kind of mid cap, small cap, large cap, just type them in the comments, and I'm just it doesn't hurt getting a second opinion. Test me out. Type it in the comment box, and I'll try to I'll do an update, do a my pretty much my opinion on the stock. Tell you what the trend is. I'll give you the briefing on all the time frames, intraday time frames. Daily chart, weekly chart, I'll give you all that. Okay, guys, so go ahead, type them in the comment box, and I will respond back in the coming days with the response. Okay, guys, have a great one, guys. I'll talk to you guys next time. Peace out.